Hey guys, hey, Eric Holmquist with Benchmark Mortgage. Hey, I wanted to put out a quick video this morning. A lot of things happened over the weekend, and I just wanted to dispel some rumors, talk about what all of this means in the mortgage world, okay? So we got all of our questions listed out that we've been getting from clients. The first one actually came from my mother this morning. Hey Eric, are mortgage rates zero? No mom, mortgage rates are not zero. What happened over the weekend is the Federal Reserve lowered the federal funds rate to zero. That doesn't have a direct impact on mortgage rates. So the first answer to the first question is no, mortgage rates are not zero. The second question is, hey, what rates did the Federal Reserve lower? Well, they actually reduced the federal funds rate, which the federal funds rate is the rate that member banks within the Federal Reserve System lend each other money overnight. So if I'm a bank in the Federal Reserve System and I want to borrow money from another bank, this is the rate that they charge me. And they basically took that to zero. So that's where the 0% rate came from. That doesn't have a direct impact on mortgage rates either. The next question that we got is, hey, what is quantitative easing and what does that mean in the mortgage world? Well, quantitative easing is basically the purchasing of assets. So over the weekend, the Federal Reserve, in addition to lowering short-term interest rates, also created a bond buying program where they're going to buy about $700 billion in assets. And they're going to buy treasury bonds and they're going to buy mortgage-backed securities, okay? And when they do that, what that does is create a demand that wasn't there for those assets, which pushes the price up and the yield down. So as a result of that, you have seen mortgage rates drop dramatically today, and you saw treasury yields go down today because of that move, okay? Now, what this doesn't tell you is the credit markets weren't working very good last week. So what that means is last week you saw rates going up in times when normally rates would be going down. And so in essence, what they've done is take rates back to about the level that they were at the beginning of last week before the credit market started to seize up. So hopefully that makes some sense. What does this mean for mortgage rates? In the short term, I think it means a lot of volatility, meaning that I think you're going to see rates moving 1/8 or 1/4% daily, sometimes more than once a day. We've been getting more than one rate sheet almost every day. So I think in the short term, that's what you're going to see. A lot of back and forth, just like you're seeing in the stock market. As the market tries to sort out all of this data, you're going to see back and forth with rates, back and forth with the stock market, the Dow, NASDAQ, all of those indices is going to go back and forth. But I think long term, what it means is, we're going to have rates low historically for a while into the future. The Federal Reserve Chairman talked about low inflation or declining inflation, and that's usually what drives up interest rates. The last question is, what are our branch policy in regards to safety or our plan? What we're going to do is everybody in our office this morning is going to be working remotely. So we'll have our phone transferred to cell phones so that we can work remotely from home. So it'll be business as usual. It's just we won't be at the office. Our office is paperless anyway, and so that shouldn't mess anything up from being able to get something done perspective. So hopefully that helps kind of clarify what's going on in the market. Please feel free to call me if you have more questions, 402-933-1141. Hope everybody has a good day. Thanks.